Hello everyone, here Chris Free, secondsguysforex.com. Hello everyone, thank you for coming to today's class. This is Ichimoku Trading. Setup strategies on any time frame here and what to watch out for in the market. This class is solely dedicated to trading with the Ichimoku Cloud. So some of you may know what that is, some of you may not. If this is your first time either A, studying Ichimoku, or B, first time in this webinar, please let me know just so I can get an idea of who's all here. I know some of you here have been coming to my classes for some of you quite a while, some of you for a little bit, and some of you are relatively new. And so if this is, again, your first time to either Ichimoku trading or this webinar, please let me know. I just want to get a good feel of where we are at for this here. Krista says, I do not use Ichi to trade. Okay, fantastic, says the first of you. Juan Feliz says first. Fantastic. Any others there? Just to make sure. Prem SC says first. Leanne says brief intro. Brief intro will be great. Absolutely. Rex says 7-year trader, need more. You know, we all need more. I've been doing this for 10 years now. Crystal says, but like to tap the potential. Fantastic. And Diane says, we can all learn from you. Fantastic. All right, great. So let's do that. Let's get a brief intro. So, and at the end of this class, I have some interesting and good news. CC Bond says, I know Ichimoku, but not hobby confident. Hobby? Habeas corpus confident? I don't know what you mean. Anyways. Yes, let's start off with a brief introduction of it. This is very important. And then we were going to get into, after we've talked about the basics of it, the construction of it, what we're going to do then is we're going to talk about some important things that we're seeing in the market due to the Ichimoku. So what is it communicating to us? What is it explaining to us? Because it has a lot of things that can give us a lot of pieces of information. So with that being said, I want to start off by identifying the components of the Ichimoku. The first, that are probably the simplest and the easiest, is these two lines right here. These are the more famous lines of the Ichimoku. This first one is called the Tenkan line, or Tenkan-sen. And it generally refers to turning line or momentum line. It's designed to gauge the underlying momentum of that particular instrument. If the Tenkan is moving up very sharply, and price action is above it, like it was here, you're in a very strong trend. Momentum is very, very strong. When the market starts to flatten out and go sideways, so does the Tenkan line. Market starts to increase again, so does the Tenkan line, and then as it starts to fall off, so does the Tenkan line. So the Tenkan is designed to catch the underlying momentum of this particular instrument. The second line that we see here, this red line, is called the Kijun-sen. This is designed to capture or illuminate or kind of give us information about the underlying trend for this instrument. If the underlying trend is stable, the price action should be above that particular line, as it is here. If the trend is flat like it is here, so is the Kijun. Price action is flat, so is the Kijun. The Kijun can often be one of the lines in the sand or a marker or a defense for a particular trend. Oftentimes pullbacks in a particular trend can go to the Kijun. Case in point, we had here in the dollar yen, we had several pullbacks, boom and boom, that touched off the Kijun, where the Japanese institutional traders and other traders sold it to continue on in the trending direction. So the Kijun can oftentimes contain a particular trend. And that's something we want to be aware of. Now, how these two lines function together, we're going to get into that very briefly. But, and we'll get into that a little briefly a little bit later, as soon as I explain all the components of that. But just know that they are kind of the lines that are responding to the price action of that instrument in real time. They're designed to move based off of the price action. The reason being is that because the man who invented this, Koichi Osada, was very interested in capturing trending moves. He was trying to build something that could capture the lion's share of a move. And he wanted to do really two things. He really wanted to do a lot of things, but the two or three main things they wanted to do was A, capture trending moves, B, find significant reversal points, when is something is most likely to reverse, and C, where are future levels of support and resistance. He created additional methods to gauge the strengths and weaknesses of these particular variables that he was catching, but for the most part, that was the main goal of what was trying to be caught or captured within Ichimoku. The other famous component of the Ichimoku is this kumo right here, or the cloud. It's famous for a couple reasons. A, it has a very interesting perspective on support and resistance, and B, it's ahead of price. Very few upper screen indicators are ahead of price. This one is. We're going to talk about the brief construction, how it can be ahead of price, how does it give you good ideas of support and resistance in the present and the future, and then we're going to talk about some interpretations of that in terms of what the market is communicating now in real time to us. The Senku, or the Kumo, is composed of two lines. This white line here is called Senku Span A. We're going to refer to it as Span A. And this blue line here, which is Senku Span B, or Span B. The shading is merely just the space in between these two lines. How does it get Senku Span A? What it does is it takes the halfway point between the Tenkin and the Kijun, and it plots that 26 time periods ahead. Now, since the Tenkin and Kijun have decided to marry for the last few candles, and they're pretty much moving together, there is no midpoint between them. They are, whatever their value is, you shoot it 26 time periods ahead, and that's your Senku Span A. Now, on another chart, we won't have this. Let's say sterling dollar. Here is the Tenkin line. Here's the Kijun. Halfway point, 26 time periods ahead, and there's your Senku Span A. So that's how it's calculated. Senku Span B is a little bit different. Senku Span B is taking the last 52 candles of price action. And what it does is it takes the absolute high and low of those 52 candles. It marks the high and low, and what it does is it splits that range between the high and low in half. And it divides it in an upper region and a lower region. In essence, what it does is it gives you a continuous dynamic 50% Fibonacci for the last 52 candles of price action. Now, I can't count it really fast in my head. I'm not Rain Man, but assuming that this is the high and the low, here's your 50% Fibonacci, and here's your Senku Span B. Now, this is kind of where some of the brilliance comes in with the Kumo and the Ichimoku Cloud. This is designed to gauge support and resistance. This changes shape, size, direction based upon A, the Tenkin and the Kijun, their midway point, and B, the last 52 candles. But all of it's based upon price action. The Tenkin and the Kijun are merely price action lines. The Tenkin is taking the last 9 periods of price action, and then what it does is it smooths that out. Actually, it doesn't really smooth it out. It kind of plots that and takes an average of the last 9 candles and adjusts that in time. And so it doesn't quite smooth things out the way a moving average does. It's a little more sensitive to price action. And so with that being said, it's still basing itself upon price action. Because it's 9 candles, it's really trying to gauge the last week and a half of price action. The Kijun Sen is based upon the last 26 candles. So with that being said, by creating the Senku Span A, we're doing that because we're taking the momentum and we're taking the underlying trend and we're creating one value for that. And that one value is the Senku Span A. That's kind of the brilliance of the Senku Span A. We take the thing which measures the underlying trend, and we take the thing which measures the underlying momentum, and we put those two together. We divide them in half. We put them two together, divide them by 2, and that becomes our Senku Span A. It's kind of brilliant because as the momentum, as the trend changes in real time, so will the Senku Span A. And so, again, Tenkan is the highest high and the lowest low over the last time period. The Kijun Sen is the highest high and the lowest low over the last 26 periods. Senku Span B or Span B is again monitoring the price action of that high and low. So in essence, the kumo is really a reflection of the price action, its individual momentum, its individual trending move, and its overall range for the last 52 candles. That evolves in real time. Why does it evolve in real time? Because Hosada believed that support and resistance is based upon previous price action more than anything else. And since price action is evolving, so does support and resistance. That's why the kumo takes different shapes, sizes, trajectories, everything. With that being said, the thicker the kumo is, the thicker the support or resistance it will give. The thinner it is, the thinner, the less support or resistance it will offer. So that communicates a lot to us. Tells us the chance that the market is likely to reverse or not reverse, likely to continue the trend or not continue the trend. It's all very useful, all very powerful information. Now, those are the basic components of the chart. There is one more component of that, but I don't use it because I don't find it to be of value. And so with that being said, I'm just going to really skip it. Now, with that being said, for those of you new, does anybody have any questions on that before I continue? And if there are no questions, I'll be happy to move on since we've explained the components of it and start to talk about what we're seeing in the euro dollar, what we're seeing in the sterling dollar, dollar Swiss, dollar yen, a few other pairs as well. Any questions on that whatsoever? What pairs and time frames? It's a little getting ahead of ourselves, but I can answer that question, but it's not going to really do you any good if you don't know how to use the individual strategies that the Ichimoku Cloud has to offer. And so, Manoj, no worries. Thanks for coming. See you next time. So if you really want to, Wanfully, I can answer that question. But without teaching you any of the strategies or even discussing some of the strategies, it really won't matter too much now, will it? You'll just be applying it kind of blindly. So I'll leave it up to you. If you want me to answer it, great. If not, then what I will do is I will start to explain how or what it's seeing in the market and then how we can use some of its strategies to trade that. No, please continue. Okay, great. Fantastic. One of the methods that is very popular amongst the Ichimoku trading, the one that's probably the most popular out there. I keep getting these requests that people want to turn on their mic. If people could not request to turn on their mic, because I'm not going to turn on your mic while I'm talking. That means your mic would interfere with mine. So whoever's out there, I've gotten several requests for people to turn on their mics. Please don't ask me to do that. Maybe it's an accident or something like that, but just letting you know. So, okay. So one of the more famous methods is the Tenkan Kijun cross. That is when the white line crosses the red line. Now, not all Tenkan Kijun crosses are the same. Upward crosses are different from downward crosses. Upward crosses are general bullish crosses. So, anyways, so general upward Tenkan Kijun crosses are considered bullish crosses. General downward ones are considered bearish. That is one of the famous ones there. But Ichimoku or Hosoda, when he defined them, he was able to qualify the strength of the crossover based on the signal. And there are three types of crossovers: strong, medium, and weak. A strong upward crossover is when you have a crossover above the cloud. If the kumo represents support and resistance, to get a bullish signal above resistance is a very good thing. It means there's nothing that's going to interfere with your trade, so that's the strongest type. A medium strength signal is one that happens inside the kumo. You haven't totally cleared resistance, but you've cleared some of it, so it's medium strength. The weakest kind of bullish signal is when you get an upward crossover below the kumo. Flip that for bearish crossovers. A weak bearish crossover is when you get a sell signal or a crossover, downward crossover to the downside above the kumo. When you get that downward crossover inside the kumo, that's a medium signal. And when you get the downward crossover below the kumo, that's a strong signal. Those are the three types of signals. Now, we have a couple of them that are coming into play on a few pairs. Not the euro-dollar, but there's something else that's kind of happening on the euro-dollar that's very interesting, that to me is kind of communicating a make or break point for the euro. I think we're at really a make or break point for the euro. I actually called the reversal in the euro way back at the FX Street conference. I said it probably won't get much higher than 142. It went just a little bit above 142 and then slammed back down. And so, with that being said, the euro to me has already entered kind of the first phase of a reversal process. To me, it's really at what I would call its last legs of this uptrend, and if it loses a certain amount of ground based upon the Ichimoku, I would say we're in a full-fledged reversal that has a lot of downside potential to it. Why is that? I'm going to answer that question, and then I'm going to answer your question, FX1 as well. Okay, so with that being said, why do I think this is at a make or break point? Well, first of all, the euro is approaching this kumo here. The kumo represents support and resistance. It's a pretty thick kumo. Should it start to bust through this kumo, penetrate into the kumo, that would seriously increase the probabilities that it's going to reverse, because it's now penetrating into the support level, the support zone, which, keep in mind, it hasn't even touched the kumo since way back in early September. On top of it, when this thing made a run, it made a nice medium Tenkan Kijun cross, it made a nice run, it floated above the Kijun for quite a long time. And then all of a sudden it slammed back below it. It slammed back below it, treated as resistance, and then further slammed back down. It's been doing nothing but selling once it broke below the Kijun. Those two things together suggest huge weakening of the upward trend structure, and they also suggest additional bearish elements. That's not good for the euro trade, for euro longs. So those two alone suggest bearishness in place, possible reversal, not really possible reversal, that we could be coming into the second legs of this reversal. And if it does, it could add steam to it. What would that look like to really say, hey, this thing's in a full-fledged reversal? Well, according to an Ichimoku trading and the traditional models, this thing would need to break through the other side of the kumo and have a daily close on the other side of the kumo. If it were to do that, then it would have broken through all of the support zone, and there really wouldn't be anything left, according to the Ichimoku Cloud, to support this pair up. So it could send this pair in for a serious amount of losses. I think that's the more likely scenario, but it still has kind of one last line in the sand, which is this kumo. This kumo is really the last defense for any single trend. If the kumo generally gets fully breached, it usually means that trend is over. And so I'm watching euro-dollar very heavily to see if it does break through the other side of the kumo, because I think if it does, it means we have a very serious unwinding in the euro-US dollar. Now, another thing that would add to that element would be the Tenkin and Kijun crossing downward, particularly the Kijun or the Tenkin separating from the Kijun downward. So the Tenkin starts to move further downward, and it gains space from the Kijun, which remains higher. Even though it would be a weak Tenkin Kijun cross, it would further add to the bearish sentiment. But right now, there's not a whole lot communicating that this upward trend is going to continue or that it's intact. It's really suggesting there's a huge weakening of this. Does everybody see that? Everybody see what I'm talking about and why? And if so, any questions on that? And if not, after that, then I'll address Master FX's question because this is a good question. Yes, no, it doesn't look like it. Okay, fantastic. Let's go ahead and move on. So Master FX1 has a question. Oh, wait. ENG has a question related to the last comment, and then we'll get into Master FX. So when both Tenkin and Kijun form one line, is it a sign of a real acute trend, right? No, not really. It could mean all kinds of things. It would depend on how the Tenkin and Kijun are on top of each other. They could be on top of each other in an upward angle. That would have a more bullish bias because they're both climbing. Here, they're on top of each other in a relatively flat fashion. That means that there really isn't any trend at all. If it was downward, then that would have more of a bearish bias. And usually, if it happens at a sharp upward angle or a sharp downward angle, that usually doesn't last for long. Eventually, the Tenkin and the Kijun separate from each other. So it only lasts for so long. Fernando PT says, in line with that, why is the Tenkin not visible on the last 3 out of 4 candles? Is it designed this way? No, charting packages, most of them work this way, that when the Tenkin and Kijun are on top of each other, it usually just has one value. So when they're on top of each other, you're generally only going to see one. You can't see both colors if they're both occupying the same space now, can you? So it just shows one. It would be interesting if a charting package, when they did come together, maybe it formed a third color or something like that. That could be interesting. But since they're both occupying the same space, and we're only talking two-dimensional space, only one of them can be shown at that time. Okay, now let's get into Master FX1's question here. It says, Chris, it seems strange that the same settings are used for all time frames. I would say this is incorrect, or maybe it was originally used on a weekly, daily time frame. What do you think? Originally it was, you are correct, originally it was used on daily. It actually wasn't used on weekly, it was used on daily. That was the first implication of it. It was used on daily time frames. It wasn't used on weekly. That's why it has the settings that it does, 9, 26, and 52. Why 9? Because this was originally built for Japanese markets, and Japanese markets used to be 6 days a week. And so 9 days would be a week and a half worth of price action. 26, if we had 6-day trading weeks, would represent an entire month worth of price action. So that's why it used the Kijun Sen to gauge the last month, because that was gauging the overall trend. 52 is just 2 months. So that's the last 2 months, basically. Okay, now, in regards to your question, you said it seems strange that the same settings are used for all time frames. Why is it strange? Why would that be strange? What's so strange about it? I don't think it's strange at all. There are two camps really about the time frames in terms of how to do that. The traditionalists say, A, keep the settings as they are, or B, adjust them per the time frame. I tend to keep them exactly as they are. I have tested many different time frames and many different adjustments, and I have yet to actually find a statistical edge by adjusting them on any different time frame to many different settings. And I've gone through about 8 time frames and 20 different settings. And so the whole point of the Ichimoku Cloud and these settings is that they're designed to filter out false signals and noise. As soon as you start to adjust the settings, you decrease the probability that you're going to be filtering out that noise and those false signals. So I am actually with the traditionalists on this. I don't think it's incorrect to use the same settings on any time frames. I use them on any time frames, and I find them to be highly effective on using on these multiple time frames. Ian G says, I know someone who uses 13, 34, 52. Great. People are welcome to do what they want. I would love to compare their Ichimoku track record with mine over the last 3 years. I guarantee I outperformed them. And I guarantee that most of the people who are using Ichimoku, aka institutional Japanese traders, are still using the original settings. In fact, the only recent book that came out of Japan was written by who was considered to be the most recent, I guess you can say, guru, absolute guru of Ichimoku trading. He passed away 2 years ago. He traded this on multiple time frames. He never once changed the settings. I have his book right here, and I found a Japanese translator here in Argentina, thank God. Turns out my good friend happens to be dating a Japanese girl. Perfect combination. So in her translation, Sasaki, Hidenobu Sasaki. And he doesn't adjust the time frames at all. And he used it on multiple time frames. And he was considered to be the most recent guru of it. And he was also rated 1999-2001 Technical Analyst of the Year. And so with that being said, based on most of the institutional traders, I don't know how many institutional traders you know out of Japan or out of Asia, but I happen to know a lot, and none of them have adjusted their setting. And they're not just trading, these aren't people that are just trading Forex. These are people trading equities, commodities, futures, stocks, everything across the board. So with that being said, MasterFX, I actually don't think it's incorrect. There are a lot of things that were only built for certain time frames. That doesn't mean they're not applicable to other time frames. The general theory is this, when it comes to models, is that if a model is good on one aspect of the markets, it's usually good on other aspects of the markets. It's very rare that a model is only good for one instrument. It's very, very rare. Because models and patterns and things like that tend to repeat themselves in the market. I've built in several models that I thought were only good on one pair, and then my team of statisticians came back to me and said, hey, guess what? We found it actually works on this, and this pair, and oh, by the way, it works on the E-mini, it works on the Dow, it works on oil, and it works on these different time frames. All to my shock. And they communicated, hey, many instruments function the same or similar. If a model works with one instrument, it often works with another. So that's my thoughts on that. Hopefully answers your question. Okay. We've got a few other questions here, and then I want to get into a few other pairs here. Carla says, for a short-term trade, could we think to buy this kumo approach? You could if you wanted to. But keep in mind, this thing may not treat the top of the kumo as a buy signal. It may not use this as the line in the sand. Remember, the kumo isn't designed to look at support and resistance as a line in the sand. That's why it has a certain thickness to it. Because you got to remember, Koichi Osada considered support and resistance to be multiple layers thick. And that's usually how it works on an order flow perspective. Very rarely are all the institutional players just lined up at one level. They're usually lined several layers deep around that level, and they usually have other levels that they want to get in and get out. Therefore, based on pure order flow or order flow theory, support and resistance is not a single line in the sand. It's several layers deep. And so you could do that as a short-term trade, but if you really were to do it as an Ichimoku trader, you would have to use the entire kumo as your stop. In other words, the other end of it. I'm not sure if you'd be comfortable with that. Also, based on the fact that it's busted through the Kijun for the first time in over 2 months, based on the fact that it sold off 5 out of the last 7 days, not including today, that's not good. Based on the fact that the Tenkin and the Kijun are not in bullish mode, that doesn't exactly excite me. I personally wouldn't do that, but that's just me. I would not do that from an Ichimoku perspective. So hopefully that gives you some idea of how I would or would not use the kumo. Okay. Fernando has a question here. Given this chart, what would trigger a new short or long for you? TK separation, kumo break on a close. What would trigger a new short would be a kumo break, particularly a close on the other side. That would trigger a new short for me, at least on the daily time frame. That doesn't mean we can't look to a 4-hour time frame or another time frame and, say, hey, we can find another bearish signal on, say, a 4-hour or maybe a 1 hour. That doesn't mean we can't do that. But based on the daily time frame, to trigger a short signal from an Ichimoku perspective, I would need a kumo break at this point. And close. In terms of what would activate a long for me, I would need a Tenkin Kijun cross to the upside, and to really get a real Tenkin Kijun cross, I would first need them to separate to the downside. In other words, I would need the Tenkin to separate from the Kijun downward, because that would have reset the last upward cross. It would have reset it with a downward cross. And then if it did another upward cross, either a medium or strong upward cross, then that would reset a long for me. But until that happens, I will not be looking at longs your dollar. And if anybody signed up for my newsletter and read my Ichimoku trade setups report, you would know that I'm pretty heavily bearish on your US dollar. So I would need a whole lot to do that. Okay. Okay, great. Fantastic. So that pretty much covers it. John says, are you already short your ESD? Yes. Yes, I'm short. Keep in mind, in an interview with FX Street on October 23rd, I called 142 as the top. Where I got short, I'm not going to say. And what I used to get short, I'm not going to say because it's a proprietary method. So I guess I just answered Nicholas Stack's question. Could I go over the trigger? I can't go over that because it was a proprietary Ichimoku signal that gave me the trigger. So I apologize for that. Tiny Dukai says, I remember your call. Good man. So let's get into some other pairs. Actually, let's just real briefly take a look at some smaller time frames to see if there are some triggers as well. Nicholas Stack says, there are no secrets, just rules, but point well taken. Well, actually, I'm going to disagree with you on that one there, Nicholas. I guarantee some of the proprietary methods that I have on Ichimoku, nobody's ever created before. I can guarantee it. I've surveyed all the Ichimoku literature out there. The only way there is another version of it is if somebody has it and they haven't shared it with anybody ever. But yeah, I created it myself, absolutely. I didn't create the Ichimoku as a whole, but the proprietary methods that I trade, absolutely I created them. Nobody else created them. I've surveyed every single piece of literature, and website and book and everything out there, and there is nothing like some of the methods that I have out there. I guarantee that. And if there is, somebody's gotten secret and they're not telling a single soul on the planet. That's the only other way they exist. Okay. Let's take a look at, real briefly, some other time frames and other triggers. And on the 4-hour time frame, this thing is still hemmed in. You want to talk about the Kijun. Take a look at this little rejection here and sell off. This thing is still falling. Tenkin's still falling. Kijun's still falling. Kumo's getting thicker, falling downwards. It's very bearish on the 4-hour time frame. So with that being said, The only way I could get a trigger on the 4 hour would be a reset of a Tenkan Kijun cross to the downside. I would need an upper cross and then another downward cross to the downside. If I got that and it was a medium or strong downward cross, I would have a trigger on the 4 hour time frame. And more than likely, that would happen before the price broke the kumo on the daily time frames. So that's my thoughts on that one there. Okay. Now we're getting a couple requests to take a look at sterling. I'm happy to look at sterling right now. Sterling's also falling like a rock. And sterling's pretty much doing exactly what I had written in my report it would do. And so it has now broken the Kijun again, but it's done it after something very interesting. We had an upward Tenkan Kijun cross that made new highs. It then found support at the Kijun, but then instead of retesting, so what did it? It found buyers at the Kijun, but those buyers faded out really quickly. They didn't last. If they did, they would have at least matched the previous highs. They failed to do that, and now 2 days of selling have so far taken out 3 days of buying. That tells me that these sellers are definitely short-term in control of the market right now, particular sterling dollar. And so with that being said, that suggests that this pair has some more unwinding to go. Where would I suspect it's going to go? Most likely the Kumo top would be its next level. It should start to test the Kumo top in the near future, probably within the next day or two. We've now broken into this range where this whole thing started. This was the previous high. It didn't treat it as support. It's failed. Right now we're at the lows of the day. Super bearish. I mean, there's really no reason why I'd want to be long sterling dollar right now. Very bearish on euro, very bearish on sterling. I'm very bullish US dollar right now. Again, you read my report, you would know I'm super long US dollar right now. And so this is where I see it unwinding. Now, here's the interesting thing about it. The next question becomes, if it's going to touch this Kumo, will this Kumo hold up? My suspicion is not likely. There may be a fib that's lined up there. Actually, there really isn't. Once it gets past 59, this last 61.8 fib, you pretty much have a Kumo touch on its way, in my opinion. And I don't think this Kumo is going to hold up because it's super thin. It just doesn't really offer much. And I think with the fact that you've had these repeated failures, and especially 1, 2, 3, 4, 5 out of the last 8 days selling, the pair has now shed about 400 pips off the highs. I think that firmly communicates that the sellers short-term are in control. They probably aren't going to stop at the Kumo. They're probably going to push it at least to the other end of the Kumo. There it might encounter some support because there was a base there before. But my suspicion is that once this base goes, we're going to be seeing sterling back around 5,300. So that's what I'm looking at on sterling dollar. Now, is there anything on the 4-hour time frame that would give us a signal? Actually, go figure, right in the middle of this class, we just had a downward crossover here. What kind of crossover is this? It's a bearish crossover below the Kumo. It's a strong bearish crossover. It actually happened, as I zoom in between these last two candles here. So basically at the start of this candle, you could have gotten short on the Tenkan Kijun cross here. It's too late to get it now because A, that happened over 4 hours ago. B, that happened at 60.30, 110 pips away. It's too late. If you were an Ichimoku trader and you're watching this and you knew Tenkan Kijun crosses, you would got it and you'd be up 110 pips right now. And this thing is still running. So there's really nothing left on the 4 hour. There might be something on the 1 hour for us. Nothing on the 1 hour. Last signal was a weak cross. Nothing since then. So this thing's off and running. So you're either in it or you're not. If you want to on the 4 hour, you can wait for another Tenkan Kijun cross to downside. I don't think it's too likely. I think you're going to have to wait for something on the daily charts. So I am definitely very bearish on sterling dollar. I'm not sure who requested it. Juan Feliz said that. Yeah. So with that being said, that's my thoughts on sterling dollar. Now, Nicholas Stacks, actually, there's a question from Alex, and then I want to have to get a question on Nicholas Stacks, and then we'll get in the remaining questions. Alex says, do you base your trigger on lower time frames? I only base the trigger on the time frame that I get the trigger. If I get on the daily charts, I base on the daily charts. If I get on the 4-hour charts, I get on the 4-hour charts. If I get on the 1 hour, I get on the 1 hour. I do not base my triggers on lower time frames when I'm not getting a trigger on that time frame. And so, hopefully that answers your question. I don't use that to zoom in and say, okay, I need to really see this on a micro level to confirm it. I don't need to get a biology sample to know that I'm sick. If I got a fever and I'm coughing, I got mucus and things like that, I'm sick. It's the same thing with trading. I don't need to zoom on some micro level to confirm the trade to get it. If I get the trade on the 4-hour time frame, I take it. That's it. Get on the daily time frame, I take it. That's it. Get on the 1 hour time frame, I take it. That's it. I do not want to look at another time frame because if you remember the values of the Tenkan and the Kijun and you remember the values of the Kumo, they're all based upon price action for the last 9, 26, and 52 candles. That's going to change the structure of the Kumo and the Tenkan and the Kijun dramatically if you go from a daily to a 4-hour, 4-hour to a 1 hour. It's all going to change dramatically. That Kumo is only designed to represent support and resistance for that time frame. This is the Kumo support and resistance for the daily time frame. It's not designed to represent support and resistance on an hourly time frame. So hopefully answers your question. And I love it. Eurodollar is just collapsing. Sterling's collapsing. Today's a good day. Okay. So, Nicholas Stacks wants to look at Aussie dollar now because his put options just have exploded. Let's do that. If you read my report, I'm also bearish on Aussie dollar. In fact, last night's class, I was calling for serious losses. Likely losses in the Aussie dollar if it broke a certain line, and it did that. And my God, sterling is just collapsing. This is beautiful. So, Aussie dollar has sold off, if you include today, assuming today is going to be a selling day, 6 out of the last 7 days. But what's more interesting from an Ichimoku perspective, it had a brief foray below it, but you notice all these wicks here that indicated buying pressure. In other words, the market was happy to buy the Aussie dollar up cheaper. They were happy to buy it up cheaper. They pretty much used the Kijun as support and started another run to the upside. Keep in mind, this whole run was preceded by a Tenkan Kijun cross way back at 91, and the thing went all the way up to 102. So if you were trading Tenkan Kijun crosses, you could have collected a good 1,100 pips there. At least a good portion of that. But now we've seen not just 1, 2, but likely 3 daily closes below the Kijun. Not just did it have a daily close below the Kijun, but the next candle opened, went right up to the Kijun, and then rejected off of that and sold off. So that further confirms the strength of the Kijun as a now resistance in this case, and that the trend is probably done for the Aussie dollar, at least in the short term. Doesn't mean the medium or long-term trend is over, but from a short-term perspective, it's done. Now, where is Aussie dollar most likely to go? First level would be this support base here at 96.61. It's about another 100 pips from here. Triple bottomed here, almost quadruple bottom, and started another 600 pip run, roughly. That will most likely be the place where this thing runs into the Kumo. If this thing starts to penetrate the Kumo, then we'll probably see a further unwinding of positions. Why is that? This thing hasn't even touched the Kumo since mid-July. It's been so strong above it, it just hasn't even come close to its support. So with that being said, I'm expecting this to find its way to 96.61. This will probably continue. If it penetrates the Kumo, then my guess is it will probably make it to the other end of the kumo. Real briefly, I just want to check in and see if there are any Fibonacci's I have to worry about. Let's do it this way. And ironically, the 38.2 posts up right here. So traders will definitely have to watch this level. But if it can get past that, then I think it's easily on its way to 9,500. So to me, short term, I only want to be shorter Aussie dollar, or I only want to be short on Aussie dollar, not long. Okay, so that's my thoughts on your Aussie US dollar. Abel says, can you show your US dollar again? If you were short your US dollar, did the Ichimoku alert you at the top of 142? I can't answer that. Because if I answered it, it would be because of a proprietary method, and to answer that without explaining it would really leave you in no man's land. So I'm going to have to let that one go. My apologies. Okay. John says, could we expect a buying opportunity in the longer term? Which instrument are you talking about? Euro, sterling, or Aussie? Aussie. Could we expect a buying opportunity in the future? Yes, you could. Aggressive would be here. These Fibonacci levels are decent. I personally really wouldn't want to get long Aussie until about here, 9,200. That would probably be the first place I'd really want to get long. In fact, that was in my interview. Mostly because of the market has been so long Aussie, there's so many contracts that are long in it, that I really wouldn't want to. I don't like to buy things when they're very expensive or super high or have been mostly going up. I like to buy things either on a good pullback or when they're depressed. Those are the best buying opportunities out there, after a good pullback or when they've been depressed. And so to me, this really isn't the time to be buying Aussie. The market's been so long, these positions are going to have to unwind. And I think that's really what we're seeing here. I think the fact that it tried to make highs and failed to hold them and then broke back into the range where those highs started really suggests that the market is seriously unwinding those positions. And so I personally wouldn't even consider it till 92. And even then, I'm going to want to get a trigger. I'm not just going to buy or sell because of a support or resistance level. I never buy or sell because of a support or resistance level. There has to be a trigger. And so if the price action gives me a trigger at 9,200, then I'm for it. But if it doesn't, I'm not going to. If the Ichimoku gives me a trigger on the lever, I'm all for it. But if it doesn't, I'm not going to. So to me, aggressive would be 96.61. You could do 95 just for the spirit of it, or 9,200. That's my thoughts on that one there. Okay, so hopefully I answers your question. Okay, so a couple questions here in red. Why do somebody say don't trade when the candle is in the kumo? Partially because the kumo represents support and resistance. This is traditional Ichimoku trading. If the kumo represents support and resistance, we generally don't want to trade inside the kumo because there is no established trend in there and there's no established winner inside that. So I generally hold to that rule if I'm trading on that particular time frame. So I wouldn't take a trade on the daily chart with the price inside the kumo. It's not my favorite method. I can't remember the last time I did it. However, that doesn't mean I can't take a trade on a 4-hour time frame, because the 4-hour time frame may give me a trigger, and that trigger might just happen to be inside the kumo on the daily time frame. That I would take, because if it's not in the kumo on the 4-hour time frame, then I'm not within the support and resistance zone for the 4-hour time frame, which has a different time compression and a different perspective on the market, has a different time horizon that trade should fulfill. It's less than the daily time frame. And so that's generally why I recommend, and I agree with that, is don't trade when the candle is in the kumo. Also, if you're looking to go long and price is inside the kumo, you want price to break outside of that kumo because the kumo represents support and resistance. So hopefully that gives you some idea of why I would or would not do that. Okay. So with that being said, I have to actually get going. There's another class coming after this, and they have to prepare for that. So I'm getting the curtain call from FX Street. So first off, I want to thank you all very much for coming. Secondly, if you want more information about Ichimoku, I have a ton of free articles on my website and videos, and you can check that out at secondskiesforex.com. If you have questions about our services, I have an advanced Ichimoku course for those who want to take it to the next level. Email me, info@secondskies.com. In fact, for the next 15 minutes, I will be on my website. I have a chat available. I'll turn that on in about 2 minutes. And if you would like to chat, you want to get some information about what we do, different articles and things like that, feel free to come chat with me. Other than that, I want to bid you all adieu. I want to thank you all very much for coming to this class. Excellent questions. Good crowd today. Keep coming back so we can cover more different topics, more information about it. And so that's pretty much it. So until then, good Ichimoku trading, good luck trading, everybody, and I will see you next week. Take care, everyone.